All right, hello. Welcome after the weekend. Starting new month and new week of market action. So let's see what we'll get. Let's see what we'll get. Looking at the monthly chart right away, you can see two previous months are pretty large range candles on a monthly basis, extended to the upside. So there is still potential to either close this gap or leave this as a gap on this candle here. And price always could want to be trading towards this monthly inefficiency here too, on a greater type of scale of retracement, but still that's something that could be in cards. So let's see, daily chart. Daily chart. So you can see a lot of separations like this, a lot of volume imbalances here to the upside. Lots of them occurring. That's interesting because many times before some measure of reversals, this could be a signature that's showing itself many times. So this is some sort of a suspension block in here. Two volume imbalances connected, forming a daily suspension block, bullish in nature. All right, so let's do the analysis now. Roughly 10 minutes ahead of what we will potentially get. I will just annotate the 3 a.m. and I will go quickly back to the calendar for today and for this week. So you can see that at 10 a.m. we have high impact ISM manufacturing PMI numbers hitting, which right away is kind of like favoring the 10 to 11 silver bullet as a potential really good mover. Tuesday 10 a.m. jolts, same for that one too. 10 to 11 a.m. potentially best. And we are gonna be approaching the NFP week this week, which means that usually the common delineation is that after Wednesday's New York Open, the price tends to go into high resistance, or more often more difficult price action. So Monday, Tuesday are expected to be actually the better days to trade. Wednesday, London Open Silver Bullet also, I suppose, would be the go-to. But then Thursday, Friday, and Wednesday after 10 a.m. can become a little bit trickier, I suppose, in terms of market navigation. But that's kind of how I see it at the moment. That's kind of how I see it at the moment. All right, so 15 minutes. Let's zoom out a little bit. Let's zoom out a little bit. You can see that we were uptrending in here after we've taken alt high, pretty extended to the upside as it is. There was no TGIF as far as I'm concerned. I mean, this could have been considered a little bit of a TGIF, I suppose, but let me see. Yeah, I guess from the high, it was kind of like meeting the criteria in here. So careful about that, I guess, but still, because we are basically at all-time highs in here right now, it's pretty difficult to like wanna keep buying this versus looking for potential short ideas to offset some positions below the lows, right? But yeah, a lot of clean or relatively clean sell side liquidity in my mind. Especially, I'm paying attention to these lows right there, which are basically the AM session low and the PM session low that are relatively equal, very, very smooth. So yeah, I mean, this is definitely like a solid idea on the downside. Hello, my friend SKT Trader, Nasdaq. Yeah, I am. So thanks for asking. I hope you are doing well too. I hope you are. So yeah, going further, we have the new week opening up for this week's trading. And it's here, so I want to annotate that too. I'm glad to hear that. Alrighty, so that's how it goes about the new week opening up. What was delivered inside of it? We gapped up, we moved lower with the bodies in here, then higher with the bodies. And yeah, pretty much both sides were offered. Maybe a little bit weaker delivery around here, but yeah, overall it's not too bad, I suppose. So ever since, price was basically just kept on going higher, taking buy side liquidity here, and now that's where we are, just banging around in a larger type of consolidation. So yeah, let's zoom out a little bit and let's yeah, I like this area in here. I like this area in here as the sell side liquidity. This is a little bit too smooth, and even going a little bit further here, that's pretty much too smooth too. So I really like this area in here overall. This is like the easier, more bread and butter type of objective, I suppose, but this is way too clean, and it's above the new week opening up slightly. So there will be two reasons this week to try to reach down into it there. So this is definitely my more favored level as it is right now. So the sales liquidity here and the new week opening up here, coupled with that daily suspension block right here as a potential draw on liquidity. Mm, yeah, my friend. I mean, we'll see. It's kind of hard to tell right now, but it might be reasonable expectation. It might be a reasonable expectation, but I guess as we'll be going every day, should give us a little bit more intel whether that's more likely or not. And yeah, seeing Monday's trading itself will be a large help, I suppose. So yeah, we'll see. We'll see. Hard to tell, in my opinion. But so far, yeah, I'm also favoring a measure of sell side being uh, drawn to as it is potentially next. So yeah, this blue level is the old high that was raided, that was taken out in here. And yeah, we are spending a great deal of time meandering around here. So 3 a.m. hit also. Yeah, I wasn't quick enough to go through the ES, this review or this pre-market, but I'll assume it has a similar situation. And just because I made my analysis here, I will stick to Nasdaq. And yeah, we'll see what we'll get. So on the buy side, we have some measure of relative equal highs being built up. And yeah, preferably what I would like to see, what I would actually like to see would be something like a false breakout above those relative equal highs that could have been potentially being faded to go lower. But the main issue that I personally see with the London Open session today in regards to potentially drawing down there is, with that new week opening up, is the fact that at 10 a.m. later today, 10 a.m., we will see, or we'll have high impact news event, which, truth to be told, is the best case scenario for this price delivery here. So, I mean, right away, I would favor that. Right now, we should not be reaching down. I mean, we could, but we should not reach the level exactly during the London Open, because there is no real news for this session. Plus, the news are later. Plus, yeah, we are so far stuck inside of a larger consolidation here, which we would need to show a lot of displacement to like convincingly move away from it or outside of it. So yeah, but I will annotate that as alt high, and I would make it actually a little bit like more gray, and just to underline the fact that this level was already raided. So there is no necessarily like an active liquidity pool that's waiting to be tagged. It's something that was already being taken out. So with that said, we will be going into the session now. There are some nice little relative equal lows in here that I actually like too. on a smaller scale, smaller basis. This is very smooth of a level here. So yeah, this might be, I mean, this sells the liquidity here. That might be a play for the long open silver bullet, I suppose. That makes sense. So yeah, I suppose we'll see. But if there will be an opportunity to pair some buy side liquidity with the sell side liquidity here, that would be very, very reasonable, I would say. Nice low, Ratifico low here, building up more sell side below it. Another one here. So lots of sell side liquidity. Lots of sell side liquidity resting here. All right, so I'm currently, or I will be currently watching how we can trade above that buy side. All right. So far, we are posting a high very close to that old high, but not yet taking it out. So yeah, I assume so far we are just waiting. So far we are just waiting, but as indicated earlier, I truly believe that the morning session should have the actual move for the day today, versus this London might offer some measure of scalp, and the sell side here would be somewhat reasonable to expect, I suppose, but I doubt that it will uh, offer a more pronounced run during this time. So that's kind of like my expectations at this moment, and we'll see. We'll see what we'll get. So yeah, I mean, definitely keeping it really simple today. And yeah, in terms of the preferred direction slash drawn liquidity, I really like lower, and I really like the sell side here. Now the question is how the price will or could deliver that potential downside. And yeah, I mean, taking buy side liquidity first, all high, would be actually pretty preferred. For any like delivery lower. But yeah, we'll see. We'll see what we get though. Alright, so far since the open in here at 3 a.m., the price doesn't necessarily offer too much clean movement. We are starting to get a little bit fuzzy in here also. Which I guess is it's reasonable for this session here. Alright, so this delivery in here so far already kind of like defers my interest in this session. And yeah, I mean, even if it would like to drop from where it is here and clear out the sell side, there's really no model of mine being presented inside of all of this overlapping price action like this. Meaning that I really want to wait for more information, I suppose. Also, I would prefer to run a measure of buy-side liquidity first, because that would be like the ideal counterparty to accumulate shorts on, to then distribute that below those lows. If we just drop from here to take out the sell side out, then that's not necessarily what I'm personally looking for. Unless we would just only sweep this sell side by a couple ticks, then reject to the buy side, then I would be interested in the sell side again, I suppose, after the buy side, but we'll see. So far there is quite a likelihood that we'll see a first presented fair value gap for the 3 a.m. 4 a.m. silver bullet forming here, depending whether this will remain imbalanced as it is. It nicely takes a low in here. So yeah, I like this little inefficiency in terms of like observing and watching price and how it delivers around it. So the next one tapped into it somewhat as institutional or French drill in here so far, and now we can watch whether this fair value gap in here will present any willingness to reach and drop down into the sell side liquidity below those relative equal lows. So yeah, if that's actually the case, or if that's actually should be the case, I would really be demanding from this inefficiency to not get closed by any means. The institutional offer like this in here and running away would be actually an ideal scenario. So at this moment, I would be pretty much content with not seeing this gap repriced at all into it. But yeah, we'll see. If this type of setup would form after the old high here was taken out, I would be I could have been considering that as my trade in here. Because we didn't, or we failed to take out the buy side there, I'm not like that, you know. I don't want to be overzealous and just hopping on the first horse that might be potentially there. Yeah. So it definitely could deliver, right? But there are some issues to it or behind it that could prevent the delivery to even this sell side there. And yeah, I mean, if that's the case, then let's just watch and see. So far, this stretching towards the sell side liquidity here looks like it's really gonna go and strike it. There is a potential suspension block being formed right there, so that's also a nice little imbalance being formed. That's nice. That's constructive for running the sell side liquidity here. So yeah, I mean the range is also like very, very small. So this price run from here to here, that's roughly 20 handles on Nasdaq. If it delivers from this institutional or French drill to the sell side liquidity down here, 20 handles. That's respectable amount, but it's still kind of like small in regards to the how large the ranges are currently. So yeah, I guess that's fair enough as expectation, as an expectation. So yeah, we'll see what we'll get. and we swept that sell-side liquidity with that final blow, so to say, delivered off of this fair value gap at 313. First presentation used as institutional or French drill, and in one scoop pretty quickly with low resistance liquidity run signatures, it delivered to the relatively cool lows right here. So now let's see what we get after that. So far we traded below it only on a week basis. Nobody's being close below it. And the thing is that, yeah, we still have the buy side liquidity resting above us, which is pretty clean, pretty obvious. And I mean, spending time in here and even making this type of runs lower like this, that will build up even more buy side liquidity as we go into later today. So that might be used, that large pool of buy side liquidity might be used for a larger magnitude type of price run, I suppose, in comparison to like taking the short term buy side relatively cool highs in here and then rejecting. So yeah, I mean, justifying this as a setup, it was definitely in the cards, but still not necessarily something. I mean, that was not necessarily what I was looking for or what I'm looking for the day in here. All right, so now that will be pretty interesting to see how we will trade below these lows in here. Initially, we put a swing low here, and now we are taking that with a measure of displacement. So I'm very curious to see how this next candle will trade and whether it will leave a measure of inefficiency in here or not, because that might be indicative in potential further weakness, and this is like the point where we can measure the willingness for a potential continuation lower for this particular price swing. So there is still some sell side liquidity here. These are relatively lows at the old high, so this is still very reasonable and within the reach of price. I suppose. Yeah, I mean, besides that, we have this low in here. That's a link to the BSI. But yeah, I can even extend this BSI, I think, into the future. Because this BSI might be actually impactful. This BSI might be impactful and it might provide some greater intel as we go. So yeah, why this BSI? Because it's large, obvious. It took short-term high in here, and it was even used in the past here and here to send price higher. So now, as we might be potentially returning to it, I'd be interested how price will deliver around it. Right. By the way, we've taken this low with a measure of inefficiency imbalance right here. All right. So as long as price stays below it, I suppose there is a reasonable likelihood of continuation. The next logical step on the downside is the sell side here and trading into this fair value gap. That's kind of like the most logical, and we just tapped into it. So this is more like a make or break type of level in here, where it should give us some more intel about how we will deliver going into the future here. Again, my assumption is that yes, this looks very enticing. Yes, we have a lower sell-side liquidity pool here that's way too smooth. But I suspect that this is more like a bait potentially still here, and that it's not necessarily going to go there, because the fact that we have high impact news later today at 10 a.m. So usually, and it's Monday also, so usually the main move, and that is like a candidate for a main move, is being reserved for that particular time. But yeah, we'll see. We'll see. A pretty nice smash lower in here. Not many up candles at all being offered and or formed. So really imbalanced, inefficient price swing in here. That if we don't go through this BC in here, I suspect that we will be starting to booking higher and redelivering all of this range to the upside. But yeah, that's something that I'll be watching personally. So either way, at the time we left way too smooth of a buy side liquidity here on the highs. That's way too smooth to stay like this. Also, so yeah, we'll see. We'll see. We booked to the low of this fair value gap, but the bodies went all the way up and closed in the upper half of it. So because this candle traded outside of this inefficiency on a week basis, this should now kind of like cap any downside. And unless it's actually really weak and really bearish, we should be quickly overlapping this week to the downside and closing below it. Otherwise, that was like a measure of manipulation, running stops, to then potentially start booking higher and or consolidating. That's also a potential, I suppose. So yeah, also besides this little institutional or French drill in here, that was very quick and fast, there was really no further entry being offered on a large scale. So that also shouldn't be allowing to position to like build large positions in only this little institutional entry for smart money, meaning that they should not be in like completely like done with shorts yet, and they still have the buy side liquidity here waiting for them to accumulate more. So that's kind of what I have in mind at this moment. So far we're making a little bit of a turn around here, and if that's the case, then all of these inefficiencies now might be a potential factor for the price. So we'll see. Tapping into this fair value gap again. And in my opinion, if we want to see like continuous movement and continuous smooth price action, we really need to move outside of this inefficiency, either to the upside or to the downside. Doesn't really matter that much, but we don't want to spend too much time inside of it, because then the likelihood of this becoming a consolidation becomes really high. So I suppose you gotta be careful about that if you would consider anything in here currently. All right, so I'm watching closely this candle right now. We are digging deeper into the consecutive encroachment, also into this week. So that would be like an area where we should see some measure of sensitivity if it's actually meaningful around here. All right, so we couldn't even reach consecutive encroachment of this week, and price is showing initial willingness to turn around in here. So that might be like a very, very early sign of potential turning here. But yeah, also no bodies were allowed into the lower half of this inefficiency. That also suggests bullishness, really. Potentially, right? So unless we just completely smash right on through on a closing basis below this inefficiency, this might still be a potential turn. But again, if that's the case, we really want to do it rather smoothly and rather quickly, meaning that we did already enough in here to send it or start sending it higher. Otherwise, if we don't, then I favor a potential consolidation going into the 4 a.m. So that's kind of like how I see it. Also, after this nice impulse lower, this consolidation at the bottom is also starting to look like a perfect bear flag, right? And it's a perfect bear flag at an area and PDRA that are suggesting that this is not necessarily bearish anymore. So if that's the case, that could be an idea to send price higher into these inefficiencies, like the 322 fair value gap, CB, maybe as far as the 317 or 316 inefficiency here. All right, so this looks like a perfect bear flag, and now we see some a larger range expansion to the downside. So let's see how it will actually move around here, whether it can close outside of this inefficiency or not, and what it will do actually specifically off of that. To me, that's looking a little bit suspect still. I think there was no close below consecutive encroachment here. Yeah, I mean, very, very polite one. Digging into this week. There is short-term sell-side liquidity below this low. So I guess that's a key reference point at this moment. As with this rundown, the sell side is being engaged. and it shows initial displacement right on through it. So that might be interesting though. That's quite interesting though. It's 340. We just displaced below this low and closed below this busy. So if that's the case, this should now act as a bearish inversion fair value gap that repels price from going higher, if that's the case. So yeah, this very smooth sell liquidity that I noted at the beginning is getting closer and closer to the price. That's for sure. Still 50 candles to go. And still, even though it looks enticing that it might go there, I still would like more to fail to reach down there and leave it for later today. But let's see. So far, price is showing a lot of displacement to the downside, and the fact that we went below this inefficiency here and we turn it into inversion for value gap, that's really playing in favor of the sell side being taken out. So yeah, I might be, or I might get surprised by the measure of volatility in here. And I mean, I feel free to be surprised if that's the case. But yeah, no. I mean, no real setups in my liking, for my liking, being formed with this price down really, and yeah, so really nothing that I'm missing out on. I believe so. So now this inversion for value gap would be key to present a resistance for the price, but already there is a little bit of an issue because look how smooth the buy side here is, and it's very smooth, right? It's perfect relative equal, and this high is lower than this high, which makes it a high probability candidate for a run on liquidity. So that's somewhat of an issue. The only idea that I can see at the moment to actually see it as usable would be if we could return back into this inversion for value gap and then really displace lower out of the lower half of it. That would be indeed potentially setting a run or a setup to run the sales liquidity here, but it will all depend how we will trade around this inversion for value gap right now. So this is definitely like a key PD array. 3:45, so 5 minutes until the 350 macro. All right, so far we can't even reach up into it. I still think that's something that should have been or could have been expected on the near term. Why? Because we are already quite extended to the downside. There was no meaningful or no run on buy side liquidity at all in here. So it's just pure delivery lower and lower and lower and lower. And yes, this level is very obvious and clean. But because we have news later on today, I still would like to leave it and not go there, rather than take it out right away in here in London. It can, after all, it's not impossible, but that's just like a more like a matter of preference on my side. But yeah, if it's gonna be taken out, then I will be adapting my idea, my logic to that. And we'll see. So there is this fair value gap here also. That's a bearish fair value gap as CB. It overlaps with the low here. It's basically taking this low of displacement. And it overlaps a little bit with that inversion fair value gap. So far, price tapped only to the low of this fair value gap and couldn't even bulk up to touch the inversion here. So if that's the case, that would be indicative in a very underlyingly weakness. But then we would expect the price to really start expanding aggressively lower afterwards. We still might see that, right? We still might see that. But if that would be the case, I would not necessarily like to see these two small little range candles there, and I wouldn't necessarily like to see this this much time being spent around this area, rather than it would just be a touch and then quick attack on this short-term low, which I suppose would be or should be the next interest for price if it's working off of this inefficiency. But yeah, already spending a little bit more time than I would like to makes the odds greater for a deeper retracement here into this actual inversion. So that's what I'm thinking at the moment. So yeah, this is definitely too much time in my liking being spent around here. So if that's the case, then the return to this fair value gap and this inversion is larger or greater in my mind. That makes the most sense at the moment. All right, there we go. But again, it's a little bit tricky to expect a sell-off from here for a number of reasons. First, we are quite extended to the downside. Second of all, we've taken sell liquidity just recently here. And we have relative equal highs resting up here. So these are kind of like the reasons why if we are gonna trade into here, then this is a little bit like a wild card and could be or should be done. All right, so this looks like an ideal reaction that would be bearish in my mind. So now this should just go and fall for the sell liquidity, really. I would really like or love to see that happening. And there is literally no need or requirement to trade up into this fair value gap again at this moment, unless it's gonna be consolidating or higher. So it traded up into this fair value gap very nicely, took short-term buy side and failed to reach the inversion fair value gap here initially, and it rejected that with a nice large range in here. So I really like this turning point around here. So that really should have been just a smash lower. Will we see that? I don't know. I mean, I guess we'll see very soon. But this is also a macro in here. And if it's really bearish, if it's really going there, this is the moment and the place to really do it. But that still doesn't change the fact that there are some issues behind it. And one of the issues is that we have those relative equal highs still there. Second of the issue is that we are quite extended to the downside, going heavily lower for quite some time, and that this is another potential bear flag forming in here after one already delivering lower. So yeah, a little bit sneaky price delivery so far. All right, so I mean, as I said, there's really no need for price to trade back into this area here if it's really bearish. But if it does trade up into it here, then that just, I mean, that's just indicating to me that it's not necessarily in a rush to go lower. And if that's the case, then I wouldn't like to be short in a market that's not in a rush to go lower. And we are already taking this high here. So that's a little bit suspect. Relative equal highs buy side there. Now touching to the low of this inversion fair value gap and building up some pretty smooth relative equal lows sell side liquidity. So yeah, I mean, looking for a short idea in here would be requiring to put a stop loss basically at this candle's high, which is basically linked to those relative equal highs that are high probability candidate for a run. And that's not necessarily something I would like to, not ideal position in my mind to be in, like that. But yeah. So. So yeah, already having a little bit difficult time to reject it. And if that's the case, then the buy side here, in my eyes, is pretty damn clean. But yeah, I mean, I suppose it's a little bit tricky because the bodies are still kind of like showing the proper respect to it. That should indicate some measure of continuation towards the sell side here because it's way too smooth. But at the same time, it feels a little bit like there is a room for tomfoolery in here and just playing some games in here that might be like screwing both sides of the marketplace at the same time. But yeah, nonetheless, interesting session to watch and observe. This was, and yeah, I mean, sticking with truth to this initial original idea of the sell side liquidity, I believe that's where we are going eventually. Whether this is from now in here it's definitely possible. So we'll see whether it delivers. But yeah, there are some questionable, a little bit questionable ideas linked to it too. So now we also returned to this inversion fair value gap, and if it's really bearish, if it's really good in here to expect lower prices, this measure of trade back into it would be pretty much, or should be pretty much enough in terms of the price delivery here, and it should attack lower, and we should see no bodies posted in the upper half, right? But will that be the case 100%? Obviously nothing is 100%, but I am still a little bit careful with it. So yeah, with that said, I believe I'll be skipping to the aim session with expectation that it will provide some measure of movement that I will like a little bit more. Not that this one was bad or anything. It was reasonable, but not necessarily offering too much on this time frame to work with. Anyway, but 10 a.m. ESM manufacturing PMI, that's kind of like the my go-to news event that I would like to watch and see how it delivers. So that's it for this one, and I'll be back for the 10 a.m. Morning session with a little bit more of analysis. So thanks for watching, kudos to you, and see you guys later.